following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show like we usually do, looking at the German DAX. And as you see, we've completed a small ABCD Gartley here, going sideways with a slightly lower bias. If we take a look at the FTSE, you'll see we're pretty much looking at the same thing. It's basically the last day and a half of just really slight downward bias from the ABCD. That's it. Now, what I'd like to do, folks, I'm going to take a little diversion here. We're going back into the history books. These 4 days between the 16th of October and the 20th of October, 5 days, were probably the most amazing 5 days in my life. We'll start off with the 16th of October. I've said many times over the past week or so what was happening in the market during 1987. I wanted to bring this up and try to show you where we are, what might or might not happen. I don't know. But anyway, you'll notice there, this is the chart for the S&P 500. You'll notice that point D up there where the Gartley was being completed. That was October the 2nd. And as you can see, we came down really strongly. And you notice the blue line there. This is the S&P 500. If you know, that blue line there was the 200-day moving average. And at that time, we completed the big ABCD. That was option expiration on that Friday, I believe. And it was a very, very profitable day because I had owned the options, the puts, and I closed them out right on the low. The Dow was down 108 points when it was trading at around 26,000, I believe, something like that, and pretty close to that level anyway. But it was a very good day, and I had been short 4 S&Ps, and back in those days, the S&P was the large S&P. That's equivalent to 10 S&Ps. So if you had one S&P in the big option, you would have 10 E-minis. So I was basically short 40 E-minis coming into that Friday, and I put an order in right before the close to sell 4 more because the market was closing strongly. My options had expired, and I thought we were going to be down because we had some really strong stuff happening around the 20th of October. So I figured we'd have a pretty much lower opening. What happened was the broker at Lynn Waldock, he put a buy order in. He not only didn't sell 4, but he closed out my 4 shorts that I had. And so this was about 10 minutes after the close. I find out all this stuff and had to talk to the manager at Lynn Waldock, and he said, "What do you want to do?" And I'd had a fabulous day, I really did. And in 1987, I had left Drexel in '82, and all of the money that I had made during those Drexel years, from '76 to '82, I had put in the Drexel stock ownership plan. And it was a substantial amount of money. It ended up not being too much, but I was pretty much bucks up on paper. So it was really not a big deal. And I said, well, I'll just get back in the market, on Monday. And of course, it gapped down, I believe, 30 handles, which was the equivalent to $15,000 per contract. But anyway, that's neither here nor there. You can see what happened. It dropped from that area, but I wanted to go through some of this. But what was interesting was the next day, we were invited to go to a wedding in California up at Hearst Castle, believe it or not. Hearst Castle had been put aside for a Friday night wedding, and it was going to be, the wedding was going to be performed at the Neptune pool. I'll put this up here and let you take a look at it here. You'll see it was for 200 guests. And I don't know if any of you folks have ever been to Hearst Castle, but it is really something. Go on to Google and just take a look at it because it is one of the most beautiful things that you could ever see. I mean, it's just so big. I mean, it was opened in 1919, and it is now it's been a state park for oh dear, since 1955 or 56, I believe. And when we lived up in San Luis Obispo, we would go all the time, and my kids loved to go to Hearst Castle as much as they did Disneyland. But anyway, we got to the park about 5:30. The wedding was at 7 o'clock, and they had white limousines to take you up the 8 miles. No, it's about 5 miles, I believe, up into the mountains where the castle is. And then they had the wedding there at the Neptune pool, and then we came down the hill in the limos, and we went to the Hearst Mansion, which was built on the property, but no one ever went to it because it was back in the trees. This is where the Hearst family lived during the early 1900s when they were building the castle till it was finished sometime around, I don't remember exactly, I think 1921 or something like that. But the mansion is still there, but no one knows that it's there. And they had the reception there. And what was interesting at the wedding, they had a nice little group there for the songs. It was Peter, Paul, and Mary. So this was big. Now the reason why this was so funny was the fact that most of you don't know this, but Merrill Lynch was actually Merrill Lynch, Pierce, Fenner, and Smith. And over the years, they had all the conglomerations and stuff, what do you call it, when they absorb each other and things like that. Well, one of the Smiths, the last one, lived in San Luis Obispo, and he owned a winery there, and actually went to school with one of my daughters at UCLA. And so we were invited to go to that wedding because of that. No, that Biltmore in Asheville, that is that's what's his name? The steel guy. I can't even remember. Alfred, oh my gosh, I'm having a memory lapse. Oh dear. What's his name? Albert. It starts with an A. Come on, boys and girls, help me. The one in Asheville, North Carolina is Vanderbilt. Yes, it's the Vanderbilt Mansion. Thanks, Terry. That's a really incredible place too, but actually I think Hearst Castle is actually nicer. I've been to both of them, but that's neither here nor there. Well, we finished that, and then the big event was what we've been waiting for a long time, and that was in Los Angeles, California, at the Beverly Hills Hotel. Ed Horowitz, one of the old guys from, he was an attorney, also worked at traded through Conti Commodities and was friends with Mike Marcus and a whole lot of people, but there were just an old trading fraternity there for the wedding. It was held at the Bel Air Country Club, and it was really a really spectacular thing. And Eddie, when they had the thing where they raise, he being Jewish, they raise him up on a chair, and he makes a prediction, and they say some prayers and stuff. And he said, here's to all the people in the stock market. They're going to get hurt really bad tomorrow. He didn't have any idea it was going to be a crash, but that's what happened. And of course, the next day, the market, went down a great deal. So anyway, that's part of that story. And then I'll cover a little bit of that a little bit later if you want to hear it. But the day of the crash was really bad because you didn't know whether you were going to get your money out of the market. That was the problem. Even if you had made money, I was long gold, and I got a break coming up here, and I'll tell you what happened that Sunday night. But we'll get to that after the break, I guess, and then we'll get into some of these charts. We're at a real critical level, of course. We've had our rally that we've been looking for, and we're going to be watching it real close, boys and girls. This is, as they say, this is crunch time.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, just mentioned that when we went to the wedding in Bel Air for Eddie Horowitz and Bev, one of the great things that a lot of Drexel people were there too. It was October 18th, 1987, of course, the day before the crash. But both my daughters were with me. The three of us went down for the wedding because they had friends of the kids at Drexel that were going to be there too, that were now in college. And the one things when they had these parties, they were so spectacular. They had these giant ice sculptures. One would have scallops, another one would have lobster, and the other one had these giant jumbo shrimp. And of course, they had caviar. And I don't like caviar, but my kids did. Anyway, that's what was so fun. But coming home that night, they were driving for obvious reasons. And when we got home, I turned on my recording because I had just started the Astro Cycles newsletter, and I had quite a few subscribers, and I had messages there, 3 of them saying, "What's going on in Asia?" I don't know anything about what was going on in Asia. So what I decided to do was to call the order desk at Drexel in New York, because I still had a lot of contacts there at the Goldberg brothers, and they just told me, they said, well, something's going on in the currency markets, because the Swiss franc was up 250 pips and gold was up $25. We didn't have any overnight trading. Remember, this was 87. The Nikkei Dow didn't top until December of 1989, so the Nikkei was not affected very much. It was mainly the currency markets and the gold market being up $25, which was the limit at that time. Anyway, so I figured something big was going to happen. Little did I know, till about 5 o'clock in the morning California time, that things were going to get pretty bad over there in New York, and of course the rest is pretty much history. Let's get to the stock market here, folks. About a little more than a week ago, I was here giving you folks some ideas of what might be happening. This was from the book Astro Cycles, A Trader's Viewpoint. This was what was going on in 1987. The market topped on August the 25th, 1987, with a 5-planet conjunction in the sign of Leo. We came down into the equinox on September the 22nd. We rallied right up into October the 2nd. Of 1987 was a perfect 61% retracement. And if you'll look at that chart that we had, that I posted just a little while ago, from 1987, you'll see that's where we were. I'll get this up here so we can take a pretty quick look at it here. That's where we were, was right at point D. That was a beautiful Gartley pattern. That's when I had put the options on for October. If I'd have bought November puts, they'd have paid 100 times more than the October puts paid, but that's neither here nor there. But this is where we were, and if you notice right at that blue line, that completed a big ABCD pattern right on the close. And as a matter of fact, Elliott Wave had a buy signal that Friday for the Monday. The problem was they could have never been filled because the market opened below the stop and the order points, and he immediately realized something was, amiss and corrected it. But these are just some of the things that I remember. The problem with that crash was it was just dropping and dropping and dropping. But remember, one of the things that we were waiting to see is to see if we were going to get that 3 to 5 day rally, somewhere between 2 and 5 day rally in some of these markets. Now, if we look at the NASDAQ, you'll see that the NASDAQ did that exactly what we were looking for. It rallied between the 11th into the 16th, a beautiful ABCD pattern stopping right at that 73,894 level. And, so far that has been the high. If we take a look at the E-mini S&P, you notice that we did pretty much the same thing. The high on this has been 28.25, and we're now trading a little bit below that. So this could be the end of that ABCD rally, and if it is, it means that we're probably going to have something pretty dramatic happening in the next coming week. And remember, we have a really big group of cycles coming in tomorrow, and then of course we have the new moon coming in on the full moon coming in on the 24th, which we have several major aspects occurring that day that should have some pretty good effect. But the patterns are what we're looking at here, and that's what's controlling what we think is going to happen. Now, we don't know for sure if it's going to happen or not, but this is the assumption of looking at the patterns and whether they're going to work or not. So that's mainly you have to keep an eye on what's going on here, and to see if it's going to be heading down or not. If we close badly today or tomorrow below those lows that we made the other day in the S&P down around the 2798 level, I believe, that would be, no, it can't be 2798. It's got to be 2740, whatever it was. Let me double check that level just to be safe. I hate to say something that is not off the bat. It was at 2710. And of course, we're 100 handles away from that, but they move pretty quick these days, so pay close attention. None of this is related to anything that we see in the news, of course, but these are some of the things that we're watching. If you'll remember, last week we were talking about the bearishness that we're seeing, in the market for crude oil, and also for heating oil, and also for gasoline. We focused on that, quite a bit. Here was the thing from the newsletter on Friday. We were looking for a rally in crude oil to come in around the 72.60 level. That was the high of that move. That done exactly what we wanted. And if you'll notice, this was the same thing that we were looking at in the heating oil contract. You'll notice that we were looking for a high to come in around 2.35. We're now breaking below the lows of October, and we are trading down below 2.28 per gallon, and that's telling us that we're looking at a very bearish pattern. And the reason why it's so important, folks, is that it was doing it in the face of some really good news for the oil market. And embargoes and all this other stuff is supposed to take supplies off the market, and even though they cut back inventories and everything, and the market kept dropping and dropping and dropping, and that's a bad sign. Whenever the market does not respond to bullish news, it only has one way to go, and that is not to the upside. It's got to be to the downside. The same thing if you have really bad news and the market doesn't go down, it's going to go up. Look at coffee, folks. Do you realize we were watching coffee at $95 and per pound, And I don't know if you know this or not, but it's had a little bit of a rally here. Let's just put this up so you folks can see this. It's actually where it was Friday. It was at 20. It was at 116.15. We hit 124 today, folks. We almost took out the April highs in coffee after that 3 drive to a bottom down there at 95. I mean, that's a monster move to see 23 cents in coffee. So. Those they don't always work that way. We saw the same thing in sugar. Sugar was a bottom down there at 11, and now it's almost 14. So and that's in the face of bearish news. So remember that, if nothing else, is because if markets don't respond, if you ever read a book that you want to understand some of this, it's Reminiscences of a Stock Operator by Edwin Lefevre. It's about the story of Jesse Livermore, and he goes through this page after page. I have literally read that book 50 times at least. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, they're chatting here in the Tiger Room this morning about basically about risk. And David White was kind enough to put in a quote by a good friend, Art Cashin from the New York Stock Exchange, a senior citizen over there. It says, men of a certain age in this business have learned that when walking into a room, the first thing to do is to look for the door. God bless you, Art. But that quote came from Knock on Any Door, 1947 movie starring John Derrick, the husband of the lovely Bo Derek. Anyway, that's basically what it is. And it's all about risk, because you want to be concerned about how to get out of a trade if it's bad, because those are the ones that hurt you. The first mistake teaches, the second mistake kills. Your first mistake might be a bad trade, but the second mistake is you don't get out of it. And that's where the problem lies. So pay attention to that, boys and girls. We'll have to wait and see what the future holds for us. But we've had this, basically it was a 3-day rally, the low on Friday. We rallied Monday, Tuesday. Tuesday was the big up day, Dow up 580 points. And as I've said before, that 580 points will lead to an 800 plus move to the downside. You just multiply that number times 1.618, and that'll give you a pretty good idea. One of the other legs that will be coming down into that level. We'll see if that's going to be the case. It's still a little bit early in the day, and we could have a substantial rally without too much trouble. But we've completed that part of the rally. The question is whether it's going to be, something that will be coming into the future or not. Let's take a quick look. We'll get it back out on the cornfields here and just take a look here at the corn chart here for just a second, and then we'll cover the euro, because that's at a key level also. You'll notice here in the corn we had that big ABCD pattern back on the Memorial Day. That was the high. We had the huge break. We had the beautiful 3 drive to a bottom pattern down there at 344. We rallied 30 cents, and you'll notice it was an equal rally to what we had between July and August. This was September to October. Beautiful ABCD format right up there at 376. We're now trading at 372. So unless we can clear that 380 level, will most probably be in a short-term downtrend of maybe a week or two, in the corn market. But that is a completed pattern, and it does line up, very nicely with the patterns that we try to see each day. Now, they don't always work that way, but when they do work, it's really nice. Here's the same pattern if you want to see it with the British pound just on a 15-minute chart. This was sent to us this morning by one of our friends across the pond. You can see those 2 rallies are exactly equal with ABCD format. It made a high at that 3130. It's all the way down to 3090. So it's dropped well over 50 pips. Remember, a 15-minute chart is as good as a monthly chart when you're trading, because you can control your risk on a 15-minute chart quite easily. On a monthly chart, it's a lot harder, to look at. So we'll see if this is going to happen or not. We have to do one thing at a time. We've been asked to take a look at the IWM. This is where we were on Friday. I put this into the newsletter. We were looking for a rally because the IWM had made a perfect 61% retracement and went a little bit below it. Not by much. From the February low, it was also a 50% retracement from the December low of 2017. So that's a very important number. The problem is we've only been able to, in these last 3 days, we've only been able to rally a 382 retracement on the Russell. So that's something that could also be a factor. This is why today and tomorrow are so key, because if we give up the ghost at that time, it is going to be a sign that we could be looking at something a lot more sinister. Remember, we had a pretty big down days, Wednesday and Thursday, and partly a Friday of last week. This week, it was a little different because we rallied. What if we end up being down Thursday and Friday hard this week, matching what we did last week? This is not going to look good, boys and girls. And remember, we're way up here in the air. It's not as if we were, at a very low level. We're at a pretty high level when you look at where prices are on a historical basis. We're still within about 4 or 5% of the all-time highs. So it's important. We've been asked to take a look at the the gold market here, and I think the easiest way to do that this morning would be to pull up a 15-minute chart, which gives us the last week. And as you can see here on Monday, we made a high up at that 1237 level. That completed that 1.618 expansion. It was also the ABCD structure that we were looking for. We were also $37 up from our low that we had made, and then we also made the 135 pattern. That was a pattern from our good friend Roy Longstreet and his son Bill, and each of those lower highs, the second number 5, of course, came right in at the 786. You'll notice that that completed at the ABCD pattern, and then this morning we rallied up to the exact 61% retracement of 0.5, which came in at 1229, and I believe we're trading at 1226 or something right now, with an ultimate target on this. If it continues to go lower, which we have lower tops in here for sure, it would take us down to the $1,215 per ounce level. That would be down $22 from the high that we made, if in fact it's what we're looking at that as we see it. The U.S. dollar is at a extremely important point. We've been watching this for quite some time. Let's just get this up here so we can do it all together and make sure everybody's looking at the right thing, keeping it on the same page, and that's what I want to. Oh, I've got to share. Let me share something even more important than this, boys and girls. This you're not going to get anywhere else, and I'm just going to give it to you the best I can. When you have these big cascading markets like we had on the 10th of October, take a look at this chart that we have here of the Dow Jones E-mini. I want you to notice this because you see the market broke down really hard, and this is a hourly chart, so you'll notice that it stayed there for well over 2 hours at that level of 26,000 in the Dow. You see how it stayed there? And then look what happened when it broke those lows of that 2-hour period. That's when the final cascade started to happen, and it matched. In fact, it was even more. We were down from down 350 to down 800 in the Dow. That's how big that drop was. And why I'm saying that's very important is there's no buying coming in there. All that's coming in is short covering, and once that is finished, look out. So pay attention to that, because you're going to see it again, because these markets, they don't change. Oh, we got a caller from Worcester. Bill, how are you?
Yeah, hi, Larry.
How are you, my friend?
So I've got a kind of a big picture question for you. You know, when you wake up and you see that the Shanghai index is at a 4-year low, and let's say we're, I don't know, 10% off the U.S. market's highs. In your historical perspective, what kind of impact does it have?
Bill, I don't think it has much of an impact, and I'm basically a flat-out technician. I look at those bar charts, and that's really all I look at. I remember the days back in '87, you know, after the stock market crashed. You know, well, actually, it was the best buying opportunity of that decade when the Dow hit. Can you stay with us, Bill? We got to pay a few bills,
yeah,
okay?
Sure.
Please do. Yeah, we'll be right back. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at tfnn.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Bill. And Bill, you were asking about the Shanghai Index, and I've posted the FXI, which is the ETF that covers that, and you'll notice that we've been down, ever since the beginning of 2018, and we're approaching some pretty strong support down in here, which I think will happen within the next week or so. So I wouldn't lose hope if you're looking to be a buyer. That would be one that I would be paying close attention to, because we are getting to really serious support here on the weekly charts, and we're looking for a low somewhere around the 24th of October, I believe, and then we'll see if in fact we get a bounce from that level. However, your original question was, sorry to ramble on, was how do I make the assumption of looking at the markets in Asia and other places with the U.S. markets, and actually I don't at all. I watch to see what's happening because of the emotionalism, because what happens here will affect people in Asia, but what happens in Asia doesn't necessarily affect us very much because we've been much stronger. So there's no fear in our market at all. Over there, there's a lot of fear because a lot of people have been hurt very badly. And so you just have to be nimble. Basically, that's all I can say. But I'm a real technician. I really don't follow the news at all. I try to look at intermarket relationships as seldom as possible, because if I focus on just the chart that I'm looking at, that gives me the amount of money that I have to risk, and that's the only thing that I can control. All the other stuff is way beyond my pay grade, Bill. So I try not to even think about it. I know it's embarrassing to say that, but that's the truth.
Well, it's a good perspective, because every time you put on CNBC, you have here, people saying, well, one market has to catch up with the other market. And I'm saying, oh, well, okay, are we going to go back to 2014 levels in the U.S. markets,
Well, everybody has an opinion, and you know what that means. When you have an assumption, everybody has an opinion, and it usually smells. So just remember, you're the one that has to make the judgment of what you're really looking at. So you're the one that makes that determination. So you have to determine the risk, and the thing that you have to control the most is the risk. So keep that in mind for sure.
All right. Thank you very much.
Hey, thanks for calling in. I really appreciate it. Okay, folks, we're going to move on here. We got a couple other things that we need to cover here. Uh, we'll be watching. I posted the chart of, I believe I posted the chart of the Nikkei also. You'll notice that the Nikkei stopped at the 78% line at that 22,000 and change. And of course, we're rolling back down again, testing that. If we get below that, we're going to be looking at something, you know, even more sinister if in fact we do get it. The key number to watch today, folks, if we close in the next day or two below that that 2710 level, Mr. Z was kind enough to do the ABCD calculations on this, and that takes us just a tad under 2600 on the S&P, which is a considerable amount from where we are right now. Whether that is going to be repeating or not, you know, is still a little bit too early. So we'll just, you know, just look at the patterns, and they'll try to, you know, keep you from getting into too much trouble. That's really what it's there for, is to find out how much you have to risk on any particular trade that you want to do. And that's the main thing to pay close attention. Now, if you trade treasury bonds, pay close attention to them, folks, because we're sitting right at that 61% retracement of the last highs that we made to the last lows. That comes in at 137.15. I believe we're right near there right now. So we should be able to hold that level. Failing that will take us down to the 136.20 level. But remember, long term, boys and girls, the charts for the notes and bonds are as bearish as it can possibly be. I mean, let's just do the notes first, because they're the largest of all the commodities that we trade. You'll pull it up and you'll see that we have several patterns coming in here at the 1618 level. And it's down 2 handles. That's equivalent to 4 handles in bonds. So you'll be looking at 132 in the bonds. Are trading 137 now. So that could easily happen, because that would be the number you'd be watching here, you know, in the treasury notes. Now, treasury notes is the rate that they use for car loans, for mortgages, credit cards, consumer loans, all that stuff. So that is the number one thing that you know, people do their calculations on when figuring out, you know, what the interests you know, happens to be. Someone asked me how much money I lost when Drexel went bankrupt in 90. Well, oh, let me see. They went bankrupt in 93 or 94, but we knew in 92 that it was all over. And it started to get really bad in 1990. That's when Mike Milken started to run into problem. But 25,000 people lost their job, and there was a lot of things that went haywire. But you know, when you're young, you don't even think about stuff like that. But that's neither here nor there. Okay. Someone's asked a question about that opening price in Apple that we've been talking about. I want to bring this up again, because we are starting to get a little bit of interest on it. And all we're saying is this was from 2 days ago. You notice that on the 16th, it opened right at the opening price around 118, and it went all the way up to 123. It's a $200 stock. So you have to risk about 1%. If you're going to day trade it, that's roughly $2 a share. But if you go back and just look at this on a basis here, you can see the opening prices. I've marked every one of them. We've got, what, 13 of them on here, and 9 out of the 13 worked, which is a high percentage, because usually it's only about 65% of the time that it'll work. But even at 65%, that puts the odds very heavily in your favor, because you know, there's no place in Las Vegas where they're going to give you a 65% edge, you know, and there's very few places in the market. The only place in the market where you're going to get an edge like that is if you're an option seller. You know, if you learn how to sell options properly, because options go, you know, they go to zero most of the time. So if you learn to be an option seller, you have a tremendous advantage. And if you do it in conjunction with the patterns, in other words, you know, if you're at point D on a buy point, you want to be a seller of puts, because you think the puts are going to go worthless. But and if it's at a high, you want to sell the calls, because you don't think it's going to get any higher. But the problem with options is, if they do turn up, you have to be very, very careful, because if they double in price, you're in big trouble. So you got to be really careful here. Someone's asked a question about the price objective that we're looking for in the crude oil. We've been very bearish that for the past a couple of weeks. We'll just bring this up, and I'll show you where. Well, we're trading it below 69 right now, so we're at 68 and change. The ABCD on this comes in at 66.50, 66.60. We could be there today or tomorrow. So this is what we've been watching here, folks. This is where we were on Friday. We were looking for be a sell up there. We went right up into that zone, and down we've come, and this is what we're looking at. So that's what our price objective would be. It would also be equal from the July to August low. So that's another one that we want to keep a close eye on. You're right, Gator. We got a lot of comedians in this room here at TFNN today. Holy moly, guacamole. All right, one other question that someone had, and that is about the silver market. I still think silver's got to get another chance down at that 1430 level, 1425. There's a big ABC there. It was lagging gold badly. We focused on that both Monday and Tuesday, and right now that is what's happening. So I'll look at Bank of America when we come back. 877-927-6648. Oh, that's Boeing Airlines. Sorry.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back, and we've been asked to take a look at Boeing Airlines. This is going back the last 9 months. The key to watch here, folks, is the time from the low in April to the high in June when we made the double top. We then came down, made a nice 61% retracement. Then we went up and made an ABCD pattern that measured to 390. The high on the stock was 393. We then broke down just recently, just about 4 days ago, stopping right at a 61% retracement of the August low. And we've had a nice 4-day rally here. Right at, if you'll notice a little red box there, it says 0.382. That's exactly what the market's been doing. And if we go below that price of 350 in Boeing Airlines, that's going to be the top for some time frame, because that's a big move, folks. Because if it fails that, it tells you that the weakness is there, and we'll be looking to see, what that is going to happen. Regarding the cycle date that we're looking at, we have Norm Winsky coming on the 23rd, I believe, the day before the full moon, I believe, and to cover some of these things. So we'll ask him about some cycle things. And then next week, we're going to try to have our good friend from Cycles Research out of Vienna, Austria, Bill Meridian, will be our guest. And then we'll be able to see if that is, if that's going to be the case, because we certainly have really good, interesting things to look at these times. Remember, it appears that the oil complex has started to turn lower, and just kind of watch that. Also, pay really close attention to these bonds, folks. They're trading 137.21. The 61% retracement of that whole last move was at 137.15. If we can hold that, you could be looking at something, pretty significant as far as a potential turn. So pay attention. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!